Uh, we are here presently with the part 2 video relating to the profitability ratios. And in this particular video, we will be discussing about the further profitability ratios. So in the previous video, we have discussed about the gross profit ratio and its significance. Now here in this video, we will be discussing about the continuation of the profitability ratios. So hence in the profitability ratios, we are going to discuss here is that is the operating profit ratio. So let's discuss the operating profit ratio through a small presentation. So therefore, this is what actually we are going to deal for the operating profit ratio here. So children, before proceeding with this, let us understand the concept of the operating profit first. Then we will be dealing with the operating profit ratio. So as you all know, as we have studied in the class 11th, profit can be classified under the three heads in accounting. That is, the first is gross profit, second is operating profit, and the third is net profit. Gross profit is a profit which we can get it from the trading account. Operating profit and the net profit is the net result of profit and loss account. So let's understand what is this operating profit stands for. Operating profit is a profit which generally gives us a clear-cut feedback relating to the business activities and business performance, because operating profit or the term operating means anything which is basically related to the core nature of the business or totally directly related to the basic nature of the business is what we call here as the operating profit. So we can see the meaning of the operating profit here. Operating profit sometimes called as interest before earning before interest and tax. It's a financial measurement that calculates how much profit a company makes from its core business activity. This figure only includes income from core operations before taxes, excluding all income from investments. In this way, it is a measure of firm's efficiency to control its cost and run its operations effectively. So if we will talk about a gross profit, the gross profit is a profit generally which is called as the overall revenue for a business. Out of that, only the production cost and the cost of the production is only being deducted. Then comes the operating profit, which includes all the expenses with the production cost along with the other expenses related to the business are also being included. For example, salary to the employees, office maintenance expenses. When all these things we are taking together, then after that we are deriving out a profit. We call it as a operating profit. And you know, the net profit includes all the types of the income, not necessary that it should be basically that is from the business point of view only. Suppose if I've got a lottery ticket and if I won a lottery ticket, so therefore the amount which I'll be receiving, that will be a part of my income if I want to include in my business. So hence that will actually constitute to my net profit. But actually the net profit, I cannot say that it's the original profit of the business. So if we need to measure the original business performance, or if I wanted to check the original efficiency or operating efficiency of the business, so the profit which I should have is what we call it as a operating profit. So hence children, I hope so that the meaning of the operating profit is clear. So in order to check the perfect operational efficiency or the perfect efficiency of the business, the kind of the ratio we can have here is, that's what we call it as a operating profit ratio. So the operating profit ratio, the formula is simple. That is operating profit upon RFO. RFO stands for here, that is the revenue from operations into 100. As I told you children, that is in the profitability ratios, we will be using the term as percentage for the answer which we will be getting. This is the reason in case of the profitability ratios, everywhere you will find that that is the ratio is multiplied with that of 100, because whatever the part which we are taking for the comparison is the part of the other thing. Like operating profit, though it's a profit, but you know that it's actually a part which is included in the value of the sales. This is a reason, in order to find out how much proportion is there in percentage, we are multiplying it with that of the 100. Now the next here, we can see it here, that is actually how to calculate the operating profit. So for this very purpose, we should know the format of the profit and loss account. The same format we have already discussed in case of the gross profit ratio. Let us discuss here through the profit and loss account how we can calculate the operating profit ratio. So children, you know it very well. We prepare the profit and loss account. It's a financial statement generally meant to derive out the two types of the profit. That is an operating profit, and the second comes here is the net profit. So let's divide, that is the first part or the profit and loss account, and its first part, let us keep it here for the operating expenses and the operating income, and the second part of the P&L, let us keep it here for the non-operating expenses or indirect expenses, or non-operating income or indirect income. So in order to understand the better meaning. So here, in case of a profit and loss account, you know, the debit side always shows what? It shows the expenses, and the credit side shows the income. So in case of a profit and loss account, you know, if our trading account gives the gross profit, then it is brought down to the credit side of the profit and loss account. If the gross loss is there, it will be brought down to the debit side. Hence, vice versa, we will be following the procedures. And but remember one thing, either gross loss or gross profit, this is an option we will be having. Simultaneously, we won't be getting these two things. You know it better. Now, next after that, let's show the operating expenses on the debit side and the operating income here on the credit side. So children, as we have already discussed, when GP is added with the operating income and is deducted with the operating expenses, hence we will be getting what? That is the operating profit. So let's just actually carry forward this operating profit. So therefore we can calculate the net profit here. So we brought this operating profit to this side as by operating profit brought down. So the non-operating expenses on the debit side here and the non-operating income on the credit side. So by just actually calculating it or by adjusting non-operating expenses and non-operating income, we will be getting here is, that is the net profit. This is the original profit and loss account, or we can see this is how actually the profit and loss account has been made. Now let us see using this how to derive out the operating profit. So suppose if the question gives you gross profit and you are being asked to calculate the operating profit. So therefore the operating profit would be like this: gross profit plus operating income. Why the operating income is added? Because it's on the same side where the gross profit is there, that is on the credit side, and minus operating expenses. Operating expenses, why it is deducted? Because it's on the debit side where actually that is which is opposite to that of the gross profit. So hence the formula we get for the operating profit is equals to gross profit plus operating income minus operating expenses. Now the next, if suppose the question gives you net profit, am I right? If the question gives you the net profit, how to calculate the operating profit out of it? So it will be calculated like this: operating profit is equals to net profit plus non-operating expenses minus non-operating income. So children, why the non-operating expenses have been added to net profit? The reason, because it's on the same side. And why the non-operating income is deducted? Because it's on the opposite side of the net profit. So same side items added and the opposite side items, that is deducted. So hence we have got the formula for the operating profit from the net profit point of view. If the question gives you net profit, then you are supposed to use this formula. That is net profit plus non-operating expenses minus non-operating income. Children, we will be dealing further what all the types of the expenses can be called as the operating expenses and what will be called as the non-operating expenses and income, that we will be dealing it later. Okay, so this is how we can derive the operating profit. Revenue from operations, it's clear already how to calculate it. Got it, children? Because revenue from operation itself mean that is the net sales. Now, the next actually we are going to deal the same formulas here what we have seen in the previous slide. The same thing here we are going to discuss about. This is the derivation of the same process which we have discussed earlier. That is the two formulas for calculation of the operating profit. Now in the question you may be given like this as an operating expense. Suppose you can be given here like this, a salary of an employee, salaries. Then after that you would have, you can get an information like this, factory rent, sorry, office rent, or you can get an information like administrative and selling expenses. See, all these things, you know, they are directly basically related to the core nature of the business and adds cost up to the business. So these things are called as operating expenses. And non-operating stands for they are the income for the business or they are the expenses for the business, but basically not directly related to the core nature of the business. That's the reason they are called as the indirect, or that's the reason they are called as the non-operating. Okay, so I hope so the meaning of the operating expenses would be clear. So operating expenses means which all the examples you can put forward. For example, salaries, like advertisement expenses, am I right? Office rent. Then you can say this one, that is your administrative and selling expenses. Any other things will be your operating expenses. And if you are getting an income relating to these things like office rent received or something, will be called as your operating income. Non-operating stands for interest on investment if it's an operating income, and if it's an or non-operating expenses stands for what? Interest paid on debentures and all other things, etc., will be called as what? That is the non-operating expenses. So I hope so that is this operating profit ratio is clear to you, and the way how to calculate the operating profit also is clear to you. Now the next after that we are going to discuss about the third ratio. That's what we call it as the operating ratio. So children, let's deal with the formula for the operating ratio. This operating ratio is basically, you know, it tells us it's a basically an expenses ratio, because if we are taking an operating profit, so simultaneously, you know, that we will be having the expenses as well. So this ratio measures the proportion of an enterprise cost of goods sold and operating expenses to that of its revenue from operations. So operating profit is a just actually a revenue uh, uh, seeking kind of a ratio, where you can say where we are just only looking at the revenue part, but operating ratio is the ratio where we are just dealing with the expenses, or we are exclusively focusing on the expenses of the business, because of which the profit get reduced. So when we are focusing only to that particular thing, that's what we are calculating in the operating ratio. Hence the formula for the operating ratio is cost of goods sold plus operating expenses upon revenue from operations. So children, you may be knowing about it, because the cost of the goods sold is the cost, the production cost, plus operating expenses. These are the things generally, you know, which helps us to either you can say the helps us to fix up either the higher selling price or the lower selling price. So more cost or the operating expenses if we will be adding, that means that is actually you know, that less selling price or less profit margin we will be having. Okay, so that's what we can easily derive out from this very particular ratio. So therefore let us discuss about further, that is like actually what is the operating expenses here. Already we discussed about it. Operating expenses means the employee benefit expenses, office and administration expenses, selling and distribution expenses, depreciation and amortization expenses. Children, why the depreciation and amortization has been added? Because this is an activity which every business has to do every year according to the norms of the company rules. Okay, so therefore like it reduces the profit, and you know, every year if we are having fixed assets, or if we are having some fictitious assets or intangible assets, so regularly it has to be written off. That's the reason it is being shown under this very particular expenses, or it is treated as to be a operating expenses. Now the significance here it comes in case of the operating ratio. Lower the ratio, better it is. Children, as I told you, this is a expenses ratio, you know, because its focus is basically on the expenses relating to the business. So that's the reason we call this particular ratio as what? That is an expenses ratio. So expenses ratio will be considered as beneficial if it is lower or low. Okay, so that's the reason the significance is here like this. Lower the ratio, better it is for the firm. because the more the low ratio will be, so it means it will be giving a higher margin of the profit or the revenue from operations. So the next here, after that, the very important thing that we need to discuss here is the relationship between the operating ratio and the operating profit ratio. So see, expenses and the profit is the thing which will be making, or we can say that the cost of a thing plus the profit is the thing which will be making the sales. Hence it's been equated like this. The cost, we can say it here, that is the operating ratio. Then the profit, originally what we can say it here is operating profit. Finally the value of it is equals to that of a sales, because you know what is the formula for the sales we used to write? The profit is equals to sales minus cost. So suppose if our sales is 100, so hence the sales includes the value of the profit as well. So therefore the operating ratio is the cost of production plus operating expenses. Operating profit is the return after, you know, paying for the cost, whatever the remaining will be there, that will be called as the profit. You know, both these things are included in case of the sales. So we can say this operating ratio and operating profit ratio are complementary to each other. The variation in one ratio will be affecting the other ratio. Let us see how it is. Suppose if my operating ratio is 15 and my operating profit ratio is 85, hence that is my sales will be how much? That is 100. I'll give you one more example. Suppose, let us assume, suppose if my operating ratio is 20 and my sales being 100, hence what will be my operating profit? It will be 80. So vice versa, this equation can be used either to calculate the operating ratio, or it can be used either to calculate the operating profit as well. And remember this, operating ratio, one being an expenses, and operating profit ratio, the other being a profit, they are complementary to each other. The variation in one will show definitely the effect on the other. This is what this equation portrays about. So children, that's all in this very particular video. There are two more ratios which we are supposed to do regarding the profitability ratios, as you all know. And these two ratios which we are supposed to deal in the profitability ratios, as we have seen the list earlier, they are the net profit ratio and the return on investment or the capital employed ratio. So that we will be discussing in the part 3 of the profitability ratios, where we will be dealing here like how to calculate the net profit ratio and the return on investment or the capital employed ratio. So go through this video, go through this contents properly. If you have got any doubt in this, we can discuss this in the online classes. So that's all for this particular video here. Thanks for watching. See you again.